Fantastic. Thank you, everyone. All right, to begin here, today's webinar is going to be based on learning how to trade in a very simple way. I want to stay away from using conventional indicators. Most traders, when they use the indicators that exist, moving averages, MACDs, Keltner channels, bands, all these indicators that you see here, sometimes it makes for over analysis and you don't really know what to do. And a lot of these indicators are based off of the same thing. So if you take a look here at all of these indicators, most charting platforms have the same type of indicators. The problem, if you think about it as a trader, is that we have to optimize to the specific time that you're using. We have to optimize it for slow periods or for fast periods. And so what works in the past doesn't necessarily work in the future. So as a trader, we have to be able to not only adapt to the current conditions, but also keep it as simple as possible. All right, so everybody can see my chart. And also, by the way, there's going to be a lot of people here in the room. Some of you are my students, others are new, never heard of Day Trade to Win or interested in day trading. You can start with one of the courses, whether it be the Trade Scalper or the Atlas line. A lot of people, what they do is they like to get everything all at once, which is what the mentorship program is all about. So if you're interested in joining the next class, I believe it's May 8th is the next class, or if you're interested in just one of the programs, check out all the products on Day Trade to Win, and you can either email me or call to make sure it's right for you. Another thing is that trading isn't necessarily for everyone. When you think about trying to make money in the market, it may seem very easy with all the videos and all the crazy claims that it's instant riches overnight, but everyone should know that trading isn't really like that. You have to practice. I'm a big advocate of practicing before you jump in head first, ask a lot of questions, start small, work your way up in number of contracts. So really the goal is to teach you a skill for a lifetime. Please be aware that trading is risky, whether it's stocks, futures, options, especially Forex. All these instruments, you can lose money and you can make a lot of money as well, but there is risk involved. So please be careful when you do begin to trade live. And that's why if you need NinjaTrader or if you need a trading platform to practice before you actually jump in and begin to trade live, I can offer that to you for free. You can download it and you can have live data to practice while you train. That's very important. Okay, so to begin, for me, living in the Eastern Standard Time Zone, the market that we're looking at opens at 9:30 for me, 8:30 Central, and so the E-mini S&P here opens right here. And you can see that the candle is very large. So in order to keep it simple, I have to understand if I'm going to buy or if I'm going to sell. The less that you have on your chart to confuse you, the better. Now, I do teach a number of methods. Scalping, for example, shouldn't be traded the first thing in the morning within the first 5 or 10 minutes because there's a lot of volatility. You should always have on your chart two very important tools. I think most of you already know from the hundreds of videos I have out there that I want to add the ATR, and I'm using NinjaTrader 8, by the way. So if you'd like to get upgraded to NinjaTrader 8 with your Day Trade to Win indicators, just send an email and we could set you up with the new Day Trade to Win version 8 Atlas line or Trade Scalper or at the open. Here I add the ATR and I want to use a setting of 4, and I'm also adding the bar timer. There's nothing you have to do to configure this, and now I have a timer which tells me there's about a minute left in the current 5-minute bar, and I also have the ATR which tells me the current conditions are roughly 6 ticks or a point and a half. Now this is very important because as you move forward into a trade, whether it be long or short or you're actually waiting for something set up, you know exactly the type of conditions that exist. Now this is universal. It doesn't matter if it's stocks or Forex or currencies, for example, futures. It's really the same basic principle price action should be universal. And so I'm looking at a universal idea that says the current conditions tell me that 6 ticks is viable. Now, 6 ticks could go either up or down. So from this candle's closing price, I could expect 6 ticks up or 6 ticks down. So as far as taking a profit target, as far as looking at a stop, trade management, all those things that a lot of people talk about, but they don't really explain how it's done, I know that based off of this, my expectation is 6 ticks. Now, the candle has closed and it's updated. The ATR now, average true range, is indicating 7 ticks. So the same thing, I can expect from this candle's closing price either 7 ticks up or 7 ticks down. Any questions for me? Al, let me know if you're okay. Sammy, Steve, Walter, Brian, Diane, Adrian, everybody else. Okay, now if you are going to take a trade, the stop should not be, as far as keeping it simple, the stop should not be smaller than the current conditions. The stop should be larger. Because if I know that the market could go up or down equal to this value, if I have a stop that's just 2 ticks, 3 ticks, 4 ticks, it could stop you out just with the random motion of the current conditions, either up or down. So just remember your stops. A lot of people don't want to place larger stops or stops that are larger than what the current market is doing. But you have to remember, it's not straight up or straight down that the market moves. It gyrates up and down. Your stop has to be larger than the 7 ticks that's currently showing, or else you may get stopped out unnecessarily or prematurely. So keeping it simple, I understand the target. I don't have 5, 6, 7 points in my mind. I just have 6, 7 ticks. And keeping it simple, I also want to look at my stop should be a little bit more than what is currently showing. If you have a smaller stop, you can get stopped out prematurely. And I really don't want to have a lot of different indicators on my chart to confuse me. So those of you who have, let's say, 5, 6 moving averages on your chart, or maybe even looking at daily, 60-minute, 30-minute, 15-minute, those are things that aren't really going to help you because there's too much analysis and information. We have to keep it as simple as possible. Now I am going to bring up at the open, and I'll bring up the Atlas line during our hour here together. But understand what you're seeing and then take advantage of it. If you notice the candles, the way that they're plotting with these wicks, as you see them here, if I think about the market trying to surpass these lows here, it could, very easily could, but if you look at how many times the market attempts to penetrate it, it tries, it's trying. When you have multiple candles, whether it's 3 or 4 or 10 of attempting to surpass a support or resistance area, and especially, more importantly, the wicks, it really tells you that something internally is changing. The market may reverse, the market may change direction, or it may just be taking a pause in a larger trend. So look at the way the candles move and look at the way that the wicks are telling you that it's trying but unable to. A grouping or multiple candles in the same area basically are painting a picture. So I want you to start looking at price action in that way. As the candles are plotting, what are they telling you? Okay, now, if I also think about the day as it progresses, a lot of people think about trends and they want to look at trends, they want to place trends in the forefront of how they trade. But believe it or not, trends don't occur quite that often. And even though I wish the market trended every day because it'd be so easy to just buy and hold or sell and hold, trends really only happen about 15 to even 20% out of the year. You have trending days. Most of the time, I would say 80% of the time, you have this kind of an action. It goes up, it goes down, it goes up, and down. Having a trend is actually the exception, not the rule. And adding to this, when you look at when trends do occur, they typically occur in cycles, just like small range days or tight range days or channeling days also occur in cycles. So if you have a cycle of, let's say, 2, 3, 4 days in a row that is choppy, very tight range, it's a channel, when that cycle changes, you're going to have 2 or 3 or 4 days in a row of a trend. So how can I identify a trend? Well, there is a way that I like to identify a trend. I'm going to teach it to you today. Again, keeping it simple for those of you who may be beginner traders, and even some of you who may already taken the courses. As a refresher, you know that I like to separate the day out into 3 parts. And the 3 parts I call A, B, and C. And if something is telling me that the market is going to trend or move higher, I can then take advantage of that trend, and maybe I'll not counter trend. Maybe I'll hold on to a trend for a trailing stop. But you have to first identify whether the day is actually trending or not. So what I like to do here, we'll keep an eye on this here, and 950. Let me add here the Atlas line just so we could see it as it starts plotting. And so what I want to do is I want to look at the 3 parts as the day unfolds. So the first part of the day, the A part of the day, is going to be from 9:30 to 12 o'clock, which is 2.5 hours. Now you can do this manually. There is software that I provide, the ABC indicator, that does this automatically. But usually what I teach, I actually show you how it's calculated, how it's done, and so you can actually plot it yourself and learn and even anticipate before any of my indicators, my software provides it to you. And that's a big benefit. So you're not just relying on software, you're actually seeing what is taught to you unfold. So what I have here from 9:30 to 12 o'clock, which is 2.5 hours, I consider this the A part of the day. And there's a characteristic of the A part of the day, which happens to be higher volatility than normal. You can see that from the ATR. You also see the news occur typically at 10 o'clock Eastern Standard, which also brings about a little bit of volatility. And here I'm going to outline the highest high and lowest low of the day. Again, the software, the ABC indicator, does this for you automatically, but I'm showing you this manually. That's how I teach it. And what you see here in the A part of the day is very consistent. News, you also have the volatility on the ATR here, higher than normal. This is all as to be expected. Now, as you move forward into the future, which would be the B part of the day, the B part of the day is important because this is the make or break that creates the trend. The B part of the day, also 2.5 hours. The B part of the day, typically, again, 80% of the time, is contained within the range that you see. It is not broken quite that often. This is not just for the E-mini S&P, this is for all markets. NASDAQ, Dow, stocks, Russell, currency, soybeans, coffee, all those markets, FTSE, FESX, DAX. Regardless of the market, you have 3 parts. Sometimes you may have to adjust the times because not every market trades the same amount of hours. But the first part of the day in any session, the higher the volatility. But the second part of the day, the B part of the day, is the make or break, which leads me to believe that we're going higher or we're going lower. And it's very easy to see this. We don't have to have any complicated indicators or waiting for moving averages to cross or anything like that. Really what I'm looking at is basic price action as I teach it, with 2 candles closing either above or below this area earlier on, so I'm looking at it happening immediately. If it happens after an hour and a half of trading in B, it's no good. It doesn't count. It's no longer the same type of environment. So what I'm looking at as we move forward in time is whether or not the market's going to be normal, which is contained here within this high low of A, first 2.5 hours, or not. And as I move forward here in time, immediately there are two candles closing above the range of A. So this is not something that happens all the time. This only happens as a characteristic of a trending market. And now I may have an opportunity to buy it, because in buying it, what you're seeing here, leads to a higher close or a higher market, or the market moving higher. Same thing if there were two consecutive candles closing lower. Let's say that as I move forward here into the future, two consecutive candles indicating the market's going to go lower, trend lower, it wants to go lower. It's not normal that it does this. Now, as I go forward here into the future, this is the day as you see it. Now, along with the ABC, I also have the Atlas line plotted on my chart, which is also telling me long strength trades, pullback trades, long, long, long. So now you see two things, the ABC, which is just pure price action, and you also see the Atlas line indicating going long. So in my opinion, when you have more than one method unrelated, solely based off of price action, indicating buying or selling, that's a good move. But in addition, remember, we have to have our stops, our targets. We have to make sure the risk with being overbought or oversold is accurately calculated. So there's a little bit more to it than just jumping in. I have to make sure that the trade itself is a good trade. So if the ATR, for example, was less than 1 point, it would not be worth taking the trade. If the ATR was closer to 5 points, which is 20 ticks, up here, I would also recommend not taking the trade, because these are extremes where the market is too volatile or too slow. Don't take the trade. It's really not worth the risk. All right, any questions for me, Diane? Any questions, Al, Dennis, Bernie, Anita, Adrian? If I mentioned to you that trends happen in back-to-back days, just like I mentioned that clumping or grouping of days happen in back-to-back days, maybe you could forecast whether or not tomorrow is going to be a trending day, or if tomorrow is going to be a tight range, channel, flip-flop, whipsaw type of day. So this is yesterday, and let me show you the day before yesterday as well. So here is yesterday with the Atlas line trades being shown. I'm going to do the same thing. If I understand that there is a trend as early as possible in the day from 9:30 to 12 o'clock, here is the first 2.5 hours, the A part of the day, what do I see happening? I see two consecutive candles beginning to close outside the range of A. So this immediately leads me to believe, based off of price action, that the market will go lower. So if the market's going to go lower, why not take advantage of it? And again, overbought, oversold, what's the risk, all that stuff has to be incorporated into the trade. But I just wanted to show you how back-to-back days of trends are very common. And I'm using the ABC method, which is here, to indicate the signals. So there's the ABC short, and here is for yesterday the ABC long. And this is what I created, and this is the software providing you the signals along with the Atlas line. So right now you're going to see the Atlas line begin to give you a signal. It all depends on whether or not the market is giving you the price action to display the Atlas line trades. So the Atlas line is using price action as well. It doesn't use, or it's not linked to any type of indicator. So this here is the example from A to B. Now, in addition, the same relationship that I've just indicated, which is, will this tell me there's a trend for the day? Can I also maybe analyze the B section, which is here, from B to C? Maybe I can look at a late day rally or late day sell-off, especially in stocks when you think about how earnings reports or information that is leaked right before the open, the market begins to rally or sell off very, 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 very heavy. And so what I'm looking at is whether or not the same relationship that I've just explained from A to B also happens between B and C. And that relationship would be two candles closing either above or below the range created here in the middle part of the day, in the B part of the day. And as you can see, it never did. So there's no rally or sell-off. And again, it's rare that this happens. And so what you're seeing is that this is normal. What's normal is this is very strong support. This is very strong resistance. The same thing, this is very strong resistance, and this is very strong support. When it's broken, we have to pay attention because it's not doing what it's supposed to be doing. What's normal, I would say. And the same thing with the day before that. If I take a look at what happened with B and C in the previous day, there is a sell-off. Two consecutive candles are closing below the range of B, which is very strong support. And so there is a sell-off as we get into the end of the day. So this would be the C part of the day. Now the C part of the day is only an hour and 45 minutes. It's a little bit smaller than the A, which is 2.5, and the B, which is 2.5. So that being said, within the first hour, the breakout has to happen. If it happens after the first hour in the C part of the day, it's not the equivalent. I would not recommend this as a late day rally or sell-off. So really what I'm saying is it has to happen immediately, or the sooner the better. Just like it did here, 12 o'clock, 12:05, 12:10, it just keeps on going and going. Classic example of a trend unfolding itself. If it happened after an hour and a half, it's no good. If it happens after an hour here in C, it's no good. Pretty straightforward. Any questions for me? So trading can be simple. It doesn't have to be complicated, but it should be rule-based. It should be based off mechanics of how the price is moving or not moving. We have to look at whether the risk is worth the trade. You can't risk 10 points to make one. All those things really take into account how a good trader realizes the conditions and how instead you're winging it, which you shouldn't do. If you're interested in learning more about DayTradeToWin software, courses, and our upcoming mentorship class, visit DayTradeToWin.com. The next class begins May 8th, 2017.